Welcome back to Finance Uncut. On today's episode, Doug Casey warns of financial chaos. So I've done a bunch of videos in the last couple of months sharing warnings from some of the most successful economists, billionaire investors, macro guys, some of the best thinkers in the game, who have been warning about inflation, higher than expected inflation, inflation that's not transitory but going to persist in the years ahead and possibly even get worse. The argument is, do central banks lift rates to combat that? Some are in that camp that are saying yes, and that will pop the everything bubble. Others say no, we're more likely headed like the 1940s. Lynn Alden talks about this a lot, where rates are kept to the floor and inflation's allowed to run. And, but what they all agree with, and even the deflationists like Jeff Snyder and especially Brent Johnson, if those that listened to the George Gammon Rebel Capitalist Conference that was just on in the last couple of weeks, you would have seen that even those gentlemen were saying that we are getting closer to the point of chaos and pain before the system changes. Brent Johnson, and a lot of people criticize Brent. I'm a big fan of Brent. We think similar on some things, we think different on others. But what he says is we're going to go through significant pain and chaos before gold and silver play some kind of role. More likely, gold plays some kind of role in the next monetary system. Jim Rickards, same thing. We're going to have chaos. We're going to have a lot of pain. Jim thinks that the SDRs, that the globalists are going to try to push the SDRs as some new reserve currency. There's the digital currencies, central bank digital currencies, that is, just going to create absolute chaos. And that brings a whole other lot of problems as well. So anyway, I guess it's a wait and see. But the one thing, and even Jeff Snyder even said, gold is the hedge for chaos. He doesn't think gold is a great hedge for inflation. He thinks it's a great hedge for chaos. And
personally, I remain very, very bullish on both gold and silver and continue to buy gold and silver coins. I think they're both going much higher. And at some point, maybe 10 years from now, gold is going to be reinstituted as day-to-day money. But that's after the almost total collapse of the current system.
Doug, you really think that we're going to be using gold like we used to in the Roman Empire days, transacting with gold coins?
Well, you don't have to go that far back in history. You can just go back to 1933, before Roosevelt confiscated gold from American citizens. Everybody had $20 double eagles in their pocket that they'd used to buy things. So yeah, I think we'll go back to that again. Sure.
Do you think we'd go back to some sort of a gold standard?
Well, look, I don't believe in the gold standard because that implies, actually, look, I hate to say something that's rather outrageous, but governments shouldn't be in the money business any more than governments should be in any other business, including schools or roads, things that people think the governments should do. All the government should do is protect you from force, which implies police for within their bailiwick, an army to protect you from force outside the bailiwick, and a court system to allow you to adjudicate disputes without resorting to force. But the government shouldn't be involved in any of these other things, certainly not the schools, certainly not the money. So I think what we're looking at with this great reset, as they call it, is everything is going to change, but not quite the way that Klaus Schwab and the Davos people think it's going to. I think it's going to get completely out of control. And that's not even counting the possibility of World War III, which incidentally won't look anything like World War II. So I'm looking for some big changes, quite frankly.
Another topic that has people divided, Doug, inflation. And Deutsche Bank came out earlier this week with a report saying this could be an extremely dangerous threat to the global economy. And the Fed is ignoring the fact that inflation is real. It's a real threat. They want to say it's transitory. What are your thoughts on it? Are we in an inflationary environment, and how dangerous of a threat is it for you?
Look, the US government is running truly gigantic deficits. I mean, it wasn't so long ago that it was considered scandalous when the US government ran a $50 or $100 billion deficit. Now it's at the trillion or $2 trillion or $3 trillion level. These are really big numbers. These are numbers that are hundreds of times bigger than past deficits. What happens when the US government runs a multi-trillion-dollar deficit, as Biden is proposing? What happens is they don't have the tax revenues to pay for that. It's greater than their tax revenues. What they do is they sell their paper to the central bank, the Federal Reserve, and the Federal Reserve credits the US government's accounts at commercial banks, and then the US government can spend it. What we're looking at here is the beginnings of a runaway inflation. The more they print, the more they have to print. And they almost have to print things because there's so much debt in the world, everywhere, including on the part of the US government, that if it's not paid off, if that debt is defaulted on, it becomes a deflation, a catastrophic deflation, where if $1 billion bond is defaulted on, what happened to the $1 billion? Well, if it was gold, it'd still be someplace. But if it's just funny money, it dies and goes to money heaven and disappears, okay? So, no, they're going to keep printing money to keep the game going. This is one reason I'm very gloomy, because we saw a catastrophic deflation in the 1930s. And that's the one thing they don't want to have happen again. So they're going to keep printing money. Prices are going to go to the roof. I hope prices of securities, stocks and bonds keep going up. That's good for rich people. But at some point they're going to crash. It's going to be chaos. That's the only thing I can really guarantee you. Will it be an inflationary depression or a deflationary depression, or both in different parts of the economy? Or will we have both in sequence, one and then the other? The only thing I can assure you of is we're looking at financial chaos.
So I agree with Doug Casey that we are headed to financial chaos. Whether we get inflation, deflation, we're now in such a big debt bubble that if we have significant inflation, we're going to see the loss of purchasing power. And as Dr. Michael Burry and Professor Richard Werner say, that it's likely to lead to hyperinflation. Even some Fed members are now warning that maybe it's not transitory. Some Fed members have actually said that the US will not always hold the reserve currency status. For them to be even talking about that is a big change. A big change. If rates do rise to combat inflation, as Doug said, we're going to have an almighty crash. Fed's power. The Fed will do everything possible to help the economy recover for as long as it takes. Grant Williams says, whatever it takes for as long as it takes. So, we saw a little talk about raising rates a couple of weeks ago, and what happened? Markets tanked. Risk markets just tanked. Just as the talk of maybe raising rates a couple of years from now. And then Chairman Powell came out and kind of tried to reassure markets. No, it's all good. We're just thinking about it now, but not really. And now he's coming out saying that the Fed will do everything possible to help the economy recover for as long as it takes. And this is the thing: if they do raise rates, it's on for young and old, as we say. And Ray Dalio, biggest hedge fund in the world, says Fed can't tighten without having big negative effects on the market. He goes on to say, you saw the reaction in the markets when the Fed just even hinted at tightening. I don't think they can tighten a lot without having a big negative effect. And so Larry Summers is in the same boat. Jesse Felder tweeted this: it's easy to say the Fed should tighten, but I think you'll see a very sensitive market because the duration of assets has gone very, very long. Just the slightest touching on those brakes has the effect of hurting markets because of where they're priced. And, with US deficits set to rise, US will have to sell a lot of bonds. And as a result, the Fed won't be able to taper or cut back on its own purchases of bonds, and may have to actually step up those purchases to prevent interest rates from rising. So I'm with Doug. Whatever happens, it's financial chaos, and that's why, for me, it's so important that I have a percentage of my portfolio in physical gold and silver. I hold physical gold and silver in some vaults, as well as some that's nearby that I've got access to. That if the you-know-what hits the fan, that's my insurance play. And to be honest, that will always play a part in my portfolio as insurance for financial chaos. I'll do another video about investing in gold and silver and how I do that, but just the physical part is my insurance for financial chaos. Not so much inflation, deflation, whatever, just financial chaos. And I just get that feeling that we are in a situation that the economy and markets is just being held up by central bank liquidity at the moment, a massive amount of debt and leverage. And, when that ends, whether we default on the debt or default on the currency, there's going to be a lot of pain to be had. And I just feel comfortable having that physical gold and silver just as that insurance play. If I want to create wealth in gold and silver, I do it another way. But anyway, guys, if you like this video, please hit that like button. Love to see your thoughts and opinions in the comments below. Do you think we're headed towards significant inflation? Do you think that central banks will keep rates to the floor? Do you think interest rates are going to rise? Do you think we're going to have market crash and just absolute financial chaos? And if we do, how are you playing it? How are you protecting yourself if we do have financial chaos? Love to see your thoughts and opinions below. Anyway, guys, take care, and I'll see you again on another episode of Finance Uncut.